Hello and welcome to the Leverage Podcast. I am your host, Paul Richard, and we are privileged today to have with us Jim Steele from Steele Solutions and in Branson, Missouri. Welcome, Jim. It's good to have you with us.
Well, glad to be here.
All right. Well, tell us a little bit about your background. I know you've had several career changes and so on, but tell us how it led you to where you are today with the point of sale systems that you're doing now.
Well, a little bit of my background. I started back in 1999 with First National Bank of Omaha. I was a direct sales rep. My region was Chicago and Illinois territory. We marketed some of the bank products as well as merchant services. In 2003, I became independent, where I had quite the education, working for multiple vendors and merchant services. They introduced a free terminal program through United Bank Card back in the early 2000s, which evolved into them offering free POS systems. And I've added many services and many companies since then. So I've been in the business for over 20 years doing merchant services.
Moto's calling you. Hey,
you didn't remind me to turn my phone off. So, but I always try to.
Go ahead.
Yeah. Just saying, I always try to be accessible to my clients, but got my volume off, so we're good to go.
Awesome. Well, okay, so point of sale has evolved tremendously over the last decade or so. The time you've been in the industry, what have you seen in terms of players in the market, the hardware, the software, the way it's generally done? I mean, anymore you got portable terminals that they walk to the table with, that type of thing. But what's been kind of the evolution? Can you talk a little bit about the evolution of point of sale as you've seen it and been in the industry?
Well, it has changed quite a bit over the years, obviously with technology changes. I actually did spend some time with a company called Digital Dining, which is in the class and caliber of Micros, Aloha. It's a higher end where business owners could spend tens of thousands of dollars just to be set up. It has evolved quite a bit. So other systems such as Clover, and I'll include even Square, has improved. Square's doing some great things. They're going after larger markets. They've actually have the ability to tap and pay for Bitcoin on Square, which is something new and exciting. So it has evolved quite a bit. They all have functionality as far as control features to save the merchant bottom line by control and limiting access depending on the job title and job category for business owners. So it has evolved quite a bit.
Yes. In something that happened with me, I had a career change and had to change locations and everything back in 2011. And I actually I'd worked at JCPenney in my college years and put myself through college working at JCPenney on the sales floor. And then I took a part-time position for Christmas that 2011, and they were just deploying iPads out to the sales floor at that point. So, and it was so difficult to get that thing to work. I mean, they had this, frame that it was in, and the scanner was a separate box, and they had all the stuff, and it was like, it was so complicated to manipulate the iPad and get that done. I wanted to go back to the old data entry on the keypad back at the register. It was, but anyway, because it was the bleeding edge of technology at that point. So,
Yep.
and that type of thing. So, but today it's so different, so easy with embedded chips and near field communication, those types of things. So maybe speak to the players in the market. You mentioned Square and that. So who are the dominant players now? Who are the top 3 or top 5 in the market these days?
Well, some that I represent are the top players. About everybody has heard of micros. I do offer micros, which is a higher end system and the most expensive as well. So I go from micros to Square and everything in between, which could be Toast is a popular name. I do offer Toast on a referral partnership I have along Clover. You see that a lot. I think Clover's excellent for retail locations. They have made stride on their restaurant application. So I have set up some restaurant, some counter service is really good for Clover. Actually, some food trucks I've set up with a Clover Mini, which has a built-in SIM card. So it makes things very easy and convenient. Does great with payroll, keeping track of time for employees. And also I offer, they're just Gretna POS could be for grocery applications to Pay Anywhere, which is similar to Square. However, I probably defer to, it's something to look at. They do have some benefits over Square, but I'd still kind of lean overall to Square because with Square, it does offer banking, so the merchant will see their money instantly. As soon as they batch out, they'll see it in their Square bank account. And they do offer Square loans, which usually I try to keep merchants away from that, but that is an option with them. Those are the main ones. I do work with Mint POS. There's some benefits of that, but also I'm conscious of the support because good support is necessary because they're called POS for a reason. So with Mint, the after-hour support is limited. So if you're open after 6 p.m. Central Time, usually I try to avoid and recommend other POS systems. And we have, all in all, over 20 different POS systems that are available. And they all have their niches, which would be good for them.
Very good. Very, very good. So in the world of highly competitive point of sale, obviously Visa, MasterCard, et cetera, they get their share for the credit card side. And then is there just a sliver of that goes to the pay for the POS system, or how does that work? How is it structured inside the transaction cost?
Okay, good question. There are several ways to price merchants, and we do have all options. There's interchange plus pricing, which for merchants that do good volume could be 20, 30,000 on up. It may be worth looking at because the more you do, the more it would make sense to be set up on interchange plus pricing, which is cost plus. Anybody can access through Visa or MasterCard or any of the issuing banks, or rather I should say Discover, American Express, even Diners. They all have an interchange level, which is their cost. That is the amount that they're going to receive. And interchange starts at 0.05% plus 22 cents transaction for regulated debit cards. Regulated meaning it's government regulated. Several years ago, there's was a Durbin Act that was approved, and for big banks, they can only charge and make 0.05% and 22 cents a transaction on their debit cards. And interchange goes on up depending on the type of card, whether it's a smaller bank debit card will have a different rate. Same with regular consumer credit. It gets into purchasing cards, commercial credit cards. All in all, there's about 150 different categories of interchange. But if a merchant's doing significant volume, it is definitely something we can do a breakdown and an analysis to see if they would benefit of going that direction. The next way of pricing a merchant would be like what Square does. They do a tiered structure. They will combine several of the interchange categories and have them at a qualified rate, which with Square, I believe, is 2.65, I believe, and 10 cents a transaction would be their qualified rate, and then the non-qualified would be over 3%. They just bundle several of the interchange categories and lump them all in together into two simple rates, the way Square does their pricing. Now, Square does offer custom pricing for larger merchants, so we can go out for quote on those as well. Next, we could just do a flat rate pricing, just do a flat, say a flat 3.5%. So it's flat across the board. So it's really simple, and it gives us the ability to pass on the credit card cost, which many merchants are doing so. In fact, you should see it, many of the pay at the pumps anymore, it'll flash credit price and cash price. That's to cover the credit card costs. So that's an option we do have, but seems like more and more merchants are going that direction. But we're on the fence. We don't push one way or the other. You can either factor in the cost of the credit cards into your pricing to begin with. You can also increase your prices, assuming everybody pays by credit card, and just offer a simple cash discount. Or instead of changing your prices, we can just add a bump, say 3 or 4%, to cover all your costs.
Very good. So it's way more complicated than I anticipated. It's for a vendor to make a decision, or a client to make a decision on that. So when you do a comparative analysis for a client, how does that work? Do you go in and, I'm making an assumption here. I'm assuming you go in and you say, okay, well, how much are you paying right now with the plan you're on? And then see if you can offer them savings based upon the volume. I'm assuming the volume, you didn't say the time frame. The volume you mentioned, was that per month, like 20 or 20,000? Was that per month?
Yes. A merchant will get a monthly processing statement. And for an analysis, which we do offer at no cost, they can simply submit, we usually recommend the last 3 statements. But if we at least have one statement, we can actually do a thorough breakdown, see if there's some unnecessary fees. And even if they don't change, we might be able to advise a merchant to go to their current processor where they can avoid some fees that are unnecessary, such as non-compliance fees. We can give good advice where they simply need to do their annual PCI questionnaire, and that alone could save them a couple $100 a year. We can look at the actual interchange categories if it's interchange plus pricing, and give a merchant good advice how to avoid some of the surcharges that may happen if they don't batch out in a time frame, or if they don't collect certain data For example, on commercial cards, they do need to collect sales tax information. If that is bypassed, they do get bumped up to a higher interchange category. So there's certain advice that would be we can benefit a merchant without even making a change. Of course, we want to earn their business, so hopefully we can find enough savings to give them enough incentive to use Steele Solutions.
Very good. So, what would you say is your sweet spot of monthly event, a merchant volume? What would be a sweet spot for you, or what range would you say fits what you're providing in your business?
Well, we have solutions for basically, hate to say all, but it starts with small merchants that may process very little, and maybe they don't process every month. Maybe they just do have a couple of events a year. We can help them, and that's a way they would actually get set up with Square. That would be absolutely the best option, because the perks are you pay nothing unless you process. And you could download the app either on a phone, a tablet, and they could do tap to pay actually right on their phone with not necessarily having additional hardware. However, they can get hardware as little as $59 that will connect via Bluetooth to their phone or tablet, so they can receive cards that way as well. We can go into the multi-million dollars a year, so we can go to the high end. And when you're doing that kind of volume, absolutely, it's going to be Interchange Plus would be the direction for them to go. That way they get the best rate each and every time. And where every little bit, every little penny, or even half a cent makes a difference for a large merchant. So we don't necessarily have a niche, but we can help businesses of all size.
Very good. And then, how much do you charge to do an analysis of a merchant's current system to see what they could improve on?
Yeah, our initial consultation is at no cost, and really, we don't need a whole lot of time to start with. They can actually go to our website and upload a recent statement or their last 3 statements, and we could provide an analysis for them. And that's absolutely a service we provide at no cost for them. Our website they can go to is Steele Solutions, the number 4, the letter U at .com.
Okay, very good, very good. And so, for example, what clients or what would not be clients or out of bounds? I'm thinking things like McDonald's would not be one, because I'm sure they probably dictate that from the top down, those types
Yep.
of things, right? Isn't that all accounting internally?
That would be all through a corporate. We could do chains, absolutely. We can negotiate with a chain. Of course, McDonald's is going to work directly, say, with First Data, typically is the largest processing company. So a lot of times they'll go directly to First Data, just like a Walmart, those kind of things. Walmart's so big, they may actually negotiate their own interchange directly with Visa, MasterCard.
Yeah.
So those are probably the margins actually are going to be very, very skinny on that size of merchant. But we certainly can talk to chains and franchises.
Got it. Got it. Very good. Very good. And so to make an introduction for you, it would be basically let us take a look at what you have and see if there's any way we could help you save on your overall costs. Because really, the margins for most merchants are fairly slim, right? So anything you can do to help them there is always a good thing. Are you seeing in the market right now? Is there a lot of like restaurants changing over to new systems, or what industries would you say are the most viable for you?
Restaurants are probably the most sought at type of merchant. Toast certainly is going after restaurants. Square's starting to go after restaurants. I'm starting to see more and more restaurants get set up with Square. Um, Clover's making some inroads, and of course you have your micros, and we have a solution called Union. They actually don't go by POS; they go by VOS because they don't want to necessarily use the POS or acronym that it could be used for. So they go by Union VOS, which stands for Venue Operating System. They are very good for high volume bars, high volume restaurants. That's their niche. We don't necessarily have a particular industry we could go after. We have a solution for, again, just about everybody, even high risk merchants. We have a solution. High risk would be travel agents would be high risk. Timeshare could be high risk. Any industry that could be subject to chargebacks, and a lot of the chargeback could be for future services, such as if you're going through a travel agent, you're paying for a trip on card for next year. What happens if that travel agent closes up? You know, what happens? And many of which would be subject to a chargeback situation where you can dispute the validity of a charge. You paid for something, but you never got the services. So the underwritings always look at what is the risk to the company. A low risk is a restaurant because when you pay for something, you receive your services or items. You're not paying for something for next year. So the longer out it goes, also the dollar amount is a factor. So if you're a jeweler with a $40,000 custom made jewelry, that is going to be higher risk and is going to be subject to a little more scrutiny by the underwriting department.
Ah, I see. I see. Yeah, that makes total sense. Well, all right. In the point of sale world, it's definitely some things I've learned today that I can remember and help refer you on those merchants that are looking, or at least maybe a lot of times they're not looking. Right? It's one of those things where you say, "Hey," because it's kind of in the background. They get the monthly statement, and it's like, "Oh, surprise!" So you're just writing a check or whatever. How that works?
Yep,
It's
you're right.
deducted from your
A lot
account.
of merchants are way too busy to go through the statements thoroughly,
Yep.
and a lot of it, I've always said, it seems like the credit card industry likes to put those statements almost in a foreign language because I think they want to make it intentionally where you don't understand it, so you throw up your hands and say, "Well, it just is what it is." And but we've been in the business long enough; we can see what's a legitimate charge. Some of it's not actually through Visa, MasterCard. It's actually a charge through the processing company where they're trying to gain extra profits. And we can separate out what has to be paid, which is interchange, and separate the other ones which are not necessary. And in the analysis, we can show actually what we can save that merchant on a month-to-month basis.
Very good. Well, Jim, is there anything in the regards to the POS systems that you'd like to share that I didn't ask you questions about? Anything else that I didn't touch on?
Well, I think you did a good job touching on many of the items. There's a lot of intricacies in the different softwares that would help the merchants from with restaurants. In fact, this morning I was asked about, does it integrate with DoorDash? We do have systems that'll integrate with DoorDash. Do you offer free placements? We absolutely do offer some free placements, but you got to be careful of the contract terms. Our company, we normally try to avoid any lengthy contracts, but sometimes we cannot avoid it with the free placements, but we can advise accordingly. But there's just, I'm just eager to learn about how the Bitcoin processing is going to take off with it. I think it's interesting where Square's leading the way with that. So it's there's always new technology, and so that's keeps me in it as long as I have, because there's always something new and always something to learn, and it's not everybody would find it as exciting as I do, but I enjoy it because there's always something to learn.
That's awesome. Well, Jim, you also offer cost segregation services through, what is it, CSSI that is your branding for that?
That's one of the companies we work with. We've partnered with a couple of them. All our services are designed to be a benefit and help the cash flow for a business owner. With the cost segregation, it's for commercial property owners. So if they own the building, we can help accelerate depreciation to lower tax liability for them, so it increases cash flow. So by lowering that tax liability, they can either pay down their building, they can reinvest, maybe it'll free up enough cash to purchase an additional building. They can do whatever they see fit with their money. It's their money. They work hard for it, so we feel they ought to keep it. So we do everything diligently to find ways for that business owner or commercial property owner to hang on to their money. And with that, we also offer a free analysis. We just need a couple of items to be able to do that. The date of purchase, the purchase amount, and the use of the building. And with those items, we can do an analysis to give them an idea what the potential savings are. Of course, it's the higher tax bracket they're in, the bigger the benefit would be for them.
Okay. So, and a lot of, I think probably people don't understand what this even is. And you're giving a good basic explanation there. It is for commercial property owners. And actually, my meeting you was the first time I really heard about this, to be honest with you.
Yeah.
And so I don't own commercial property, but it's good to know that this is available. So a couple questions about this area. What would be your best guess as to how many commercial property owners actually utilize cost segregation in their accounting?
Just to make it clear, we're not competing with their CPA. We, in fact, work with their CPA.
Sure.
We do continuing education classes throughout the year that we do offer. So we do those classes for CPAs. We are the experts as far as cost segregation. Just like with your health, you would actually, if you're having heart issues, you go to a cardiologist, so you go to a specialist. And we are the specialist in the category of cost segregation. We make sure we utilize, because there's lots of pages in the IRS tax code, too many for any individual CPA to know everything. We specialize in depreciation, and we do want each commercial property owner to take full advantage of the existing tax law and take advantage of it. And like I said, they work hard for the money, they can keep more of it. Depreciation adds up to be the same over the long run, but $1's worth more to them today than in 39 years.
Right. Right. Okay. So yes, of course, you're helping bring it to the attention of the accounting community, because like you say, it's a specialty area and there's no way you could know that. So for this particular area, is your general market starting with like webinars and training for those that are in the accounting field, CPAs, that type of thing? Is that kind of the way you normally enter into finding clients? Because obviously they're already working with clients that own commercial property, or what are you finding in that industry?
Yeah, we do try to partnership with CPAs is a terrific excuse me. Yeah, it is a terrific partnership for us because they can actually give good advice to their clients. Also, we can go work with commercial realtors as well. We can do an analysis on a property while it's on the market, so we can show the tax benefits, uh, or should I say, the realtor can show the tax benefits of purchasing such a property, and or we can work directly with investors or anybody that recently purchased a property. And it doesn't necessarily have to be recent, but it could be several years old, and uh, we can still do an analysis even if it's 5, 10 years old, and it still could be of benefit to the merchant.
Sure, sure. Now mine was ringing. My watch was ringing, actually. Well, very good. Okay, so that's the um, it's a very different market than POS, and it's very special. Utilization. What? I mean, give me an idea. If somebody has, let's say, a $3 million building, what if they cost segregate versus not cost segregate? Can you give an idea of, obviously it varies by industry or use or those kinds of things, but what could they expect to save? Could you put a percentage on it? I mean, could they save 2% or 5% on annual appreciation, or what do you think?
Well, the ROI could be 20 to 1. For example, I gave a quote to a hotel owner who's selling a just one of their buildings. They're selling that to be condos, and the estimate was $110,000 in tax benefit on a property. Well, hold on. That was being sold for, let me back up here.
Sure, sure.
I think she was asking $8 million for the property, and the tax benefit would have been $110,000 for a study we would do for around $7,000 was the cost of the study. So the return on investment would have been significant on it.
Very good. Wow. Yeah. So there's a lot of potential there, it sounds like. And uh, so would you say that there's a need for doing a webinar on this, or does your CSSI company provide webinars? Or if, let's say we've got somebody that is a CPA or is in the accounting field that wants to learn more about this, what's their best route with you? I mean, obviously calling you is one thing, but is there ongoing training, ongoing webinars? What's the opportunity there?
Well, when we work with CPAs, they simply refer their client over, and then we can do a webinar with the CPA as well as their client. And we
Okay.
can go over the analysis that we came up with. Absolutely. And um, and it depends on their tax bracket. So if they're in one of the upper tax brackets, it's definitely something to look at. Otherwise, if they're not worried about their tax bill, then I wouldn't even worry about it. But anybody that's concerned or complaining what they have to write that big check to the IRS, I always say you either write the IRS a big check or us a small one. And but we can definitely do a free analysis to see if it's something that would make sense.
Sure, sure. All right. That's good to know. Is there anything in that realm that I didn't ask about? Because that is something, like you say, it's something that you really need to set up with the CPA to meet with the client, because obviously you're not trying to bypass them, right? You're trying to work in conjunction with them.
Yep. We also do more than just cost segregation through CSSI. They do offer other products, which is all related to the same industry. We could place values if there's a big renovation. Say if a hotel is going through a big renovation, there's a value of what's going into that dumpster. We can actually place a value what's getting tossed away, and that could be written off. We can assist with that. We can help with tangible property regulations, and I apologize, I did misspeak. They don't necessarily have to own a commercial property. They could be leasing it, but if it's a big renovation of at least $200,000 to $300,000, our services could be looked at as well, and we can absolutely do an analysis to see if it could be a benefit. And also, they have a partnership with Green Zip Tape, which is designed for new builds. It's basically cost segregation on steroids. What Green Zip Tape is, it's by using this particular drywall tape, we can actually do an estimate as far as the savings on using it. It's basically viewed as a green product because it makes drywall reusable in the eyes of the IRS, and by doing so, it totally changes the depreciation schedule, and we can accelerate depreciation tremendously. For example, on a $10 million, $10 million new build, the estimated savings could be $1 million in tax savings right off the bat. It really is cost segregation on steroids is what it is. And for more information, if somebody's doing a new build of at least $10 million where there's a significant amount of drywall, we'd love to talk to them about this type of product as well.
Wow. That's cool. That's really, really cool. All right. Well, Jim Steele with Steele Solutions. Can you go ahead and give us your, I have it here. I'll give the phone number. You can call Jim at 417-294-1882. Is that still a valid number?
That is correct.
All right. Or you can go to Steele Solutions number 4 and the letter U.com to submit for a free audit. There, it's right at the bottom of the page. I took a look at your website before we took off on this adventure today, so I got a chance to see what's going on there.
And that's a good kind of audit too.
It is a good kind of audit. Yes, not an IRS audit. This is this is a savings audit, right? So
absolutely. Absolutely.
All right, Jim. Well, thanks for being on the podcast today. It's been a pleasure learning and understanding what you got going on here much better. I feel educated in a big way. So thanks again for being with us, Jim.
Well, thank you for having me.